Welcome to the daily stock review of Republic Airways Holdings. Goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. That sounds good? Subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years. I'm sharing lessons along the way. This is my investing process. Today I'll go over how I came across this stock and perform the 5-minute check to see if it's worth looking into further. These are the investors I learn off. They did pretty well for themselves over just a little while. By following the breadcrumbs they've left behind, we should be able to follow in their footsteps. If you like the investing resources I wish I had when I first started, they're free. Link in the description. It's my gift to you guys. Let's get started. Republic Airways. Had a pretty rough trot, hey? Over the last 5 years, stocks decreased 84%. And if we have a look in the last year, oh, what a weird chart. Must be a bit broken. But in short, the price is fluctuating about, what are we talking, like 15 up to 20, maybe 25, 24 during that time of the last 12 months. So the stock's fluctuating quite a bit. Like in this little part down here in the last 12 months from like a range of, 16 up to 24. That's a pretty big variance, and that's when it starts to get a little bit interesting. There we go. So, how to come across this stock? I'm looking at small caps in the industrials sector and businesses that had high revenue growth over the last 3 years. So that's how I've come across it. I'm going to go and jump into the annual report because for our 5-minute check, I want to have a look at the financial statements. Ooh, isn't this little tiny writing? Thanks, guys. Like, all this wasted space in the middle could probably be squished together. Go to a double line there. Far out. All right. So let's have a look at the income statement first, which is also known as a statement of operations. So we got revenues. Interesting. Revenues haven't grown that crazy amount. Pardon me. Still battling this cold, guys, so bear with me. Appreciate it. What are we in millions? So 1.4 billion, 1.4 billion, 1.6 billion. Total operating expenses. How is this business on my list of high revenue growth? What's going on? Maybe in a previous year that had jumped up, but that doesn't seem to be hitting the mark. You're always going to have a couple of these weird and random kind of outliers to have a look through. So while we're here, let's just see what the difference is between this business and see if it's worth looking at still. So we've got total operating expenses is growing. 1.3, 1.3, 1.5 billion that is. That means that we've got some, pretty high costs. Business's operating income is about 10% of what it's made up here. So 10% margin on the operating, and our net income, what do we get? 76, 64, 54. So that's pretty low. What do we got? That's roughly half. So we're talking 5% kind of margin out of the business for net income. Nothing really crash hot there. Like, let's have a quick look at the cash flows of the business, see if there's anything interesting going on here. Got 54, 64, 76 for our net incomes. Net cash provided by operating activities. We've got 329, 226, 322. purchase of property and equipment. Looked like it had fairly mirrored that cash that it was generating, but it's also spending more on property, plant, and equipment than it's generated from its core business. So that's an interesting one. Where's the rest of the money come from? So how are they financing the business? So let's move on to financing activities. So proceeds of debt. Yeah. All right. So the majority of it's being funneled from debt. So they buy, this most recent year, they've bought more debt than they've had to pay off. You know, they bought 300 million worth of debt. They've paid off 231 million in debt from a previous year, like that they've bought. So really, they're just buying more to pay back the debt they already own, and then investing the rest of it back into property, plant, equipment. Kind of an interesting one. For me, the business hasn't grown. Like in terms of its revenues at all. There's like a small amount. It does have a pretty significant amount of debt that it's bringing on each year, and it's increasing. Like 476 to 117 to 300. Oh no, it's not increasing, but there's more here that they're taking on. There's more than they're having to pay off. This is a one-off in here. So look, there's nothing really that's jumping out at me here. Like the cash that business is generating isn't really growing. The net incomes and the margins of the business are pretty razor thin. So that's not really interesting for me. And it doesn't represent a exceptional business that's going to, you know, have the potential to 100x in a 20 to 30 year time frame. And what else we got? Yeah, it's funding itself through debt with that growth plus its own cash that it's generating. So look, that's cool, and it can be in the right ratio and things like that, but this isn't a business that I want to look into further. I don't know why this came up on the screen. There may be a little number a bit funky. Which tricked the system, but hey, you get that sometimes. That's why we do a 5-minute check and check these out instead of spending an hour reading this report to try and understand the business a bit more, and then getting here and going, wow, this is a pretty fucking ordinary business. There's no point looking into it any further. So we'll cut it there. If you like this, or you want to see the rest of these small cap stock reviews, which are probably a little bit more interesting and insightful than this one, check out the playlist that's been shown now, or check out this next video that YouTube thinks you'll like. Cheers.